Common types of property ownership. When buying a property, there are a number of different ways you can own it. Depending on your circumstances and/or objectives, each ownership type provides its own advantages and disadvantages. In this podcast, we highlight some of the most common types of property ownerships available. There are various factors to consider when assessing the best type of property ownership to have, including its simplicity, asset protection, tax benefits, financing, estate planning, capital gains, and your personal circumstances. Selecting the right property ownership can be easy for some buyers, but it can be a complex decision too. You do have the flexibility to alter an existing ownership type, but this can be an expensive exercise. You'll likely be required to service legal costs, capital gains tax, accounting fees, and even stamp duty. This is why it is important to take careful consideration into your current and future circumstances, understanding your objectives, and most definitely seeking professional advice. Your accountant or financial advisor will be the most qualified person to offer the right advice in this space. Let's discuss the four main property ownership types. Number 1, buying property in your personal name. The most simple form of property ownership is buying a property in your personal name. This can be as an individual or as a joint owner, as an example, a husband and wife. This is also the most common ownership type. It's the easiest way to borrow funds via a mortgage. It also offers tax entitlements to the owners, such as tax depreciation, property expenses, loan interest, etc., and also provides the owner to claim a full capital gains tax exemption when selling. Property investors don't always have the same objectives, nor do they generate the same sort of employment income. Some may want to employ a positive or negative gearing strategy. It may be the simplest form to buy. It can also come with risks depending on your individual circumstances. Number 2, buying a property in a trust. There are a number of different types of trusts which will not elaborate in this podcast. However, a trust is effectively a legal entity. It's a popular way to own a property as it provides asset protection and suits a well-structured estate planning strategy. A trust allows for a number of individuals or a company can take part in the property ownership and be listed as a nominated beneficiary, but they're not actually considered owners of the property held within the trust. This is where a trust can offer the asset protection for buyers. A trust can also distribute profits from the trust to multiple beneficiaries, which may have its advantages. It can be more comprehensive to set up a purchasing of a property through a trust. However, there are costs associated to setting this up and to administrate it on an annual basis. Seeking advice from an accountant is a very important way of considering if this is appropriate for you. Number 3, company ownership. This is another form of property ownership. It's not so common to own a residential property through a company, as it is more notable for companies to purchase a property to occupy their business. It's not seen to offer the same tax benefits due to the fact it's not eligible for full capital gains tax exemptions. Obtaining finance can be difficult, but the risks of owning a property in an operating company can be high. If a company is sued, the property may also be at risk. Careful consideration into your company and personal circumstances is critical. It's essential to seek advice again from an accountant. Number 4, a self-managed super fund. Self-managed super funds have been widely popular over the last 2 decades for its control and flexibility it provides people to manage their superannuation. The popularity of purchasing an investment property through a self-managed super fund is trending. It offers some great opportunities of allowing you to leverage your super to borrow additional money, but obviously this comes at further risk. Anytime you borrow, you can either magnify your gains or losses. There are several structures that are required and they need to be done correctly. The costs are also high to establish this strategy, and some people may not see it feasible if their balance isn't appropriate. Buying property is among the most rewarding asset you'll ever own, but you also need to make sure you administrate your self-managed super fund by following various rules and obligations. A financial advisor is your number one person to discuss the advantages and disadvantages of a self-managed super fund. Lending is also different and rates and fees are generally higher. Working with a trusted professional will certainly help you in this space. It's the most complex property ownership, so guidance is essential. One of the best benefits of buying a property as a self-managed super fund is the low tax rate being currently at 15%. This means the rent will only be taxed at 15%, while the tax deductions can also be used to reduce the tax liability from your 15% contributions tax. At retirement, the self-managed super fund will be entitled to a 0% tax rate, which means both the rent or income and profit, being the capital gains, could potentially be tax-free in the future. What to do next? In the year of 2023, sensible and strategic planning will see you find some great investment value in the property market. Seeking professional advice is the key to your success. If you have developed adequate equity, this may be an incredible opportunity to enhance your wealth and take the next steps to reaching a successful retirement. If you'd like to learn more about buying property, investment, or personal, please don't hesitate to contact us. We would welcome the opportunity to help you with your property purchase. Our YouTube channel and market insights on our website are also a great place where we provide a wealth of information to assist you in many areas relating to property. If you'd like to learn more about our services, please feel free to visit our website at www.crestproperty.net.au. Thank you and bye for now.